morning, everybody. Welcome to the Game Plan. Hope everyone had a good 3-day weekend. If you celebrate here in the U.S., it was a nice little break. A special shout out to the Memorial Day crowd and all of those amazing heroes that we have lost over the years. All right. So again, always remember them because that's where we get our freedom from. Okay, into the action we go today. Number one, what do we have? We have the markets flatlining to slightly higher. We did see some bounces in commodities over the weekend. Now, I say over the weekend, but technically it was on Monday. We did see commodities trading, at least gold and silver. Silver had a really nice day. And we also are seeing some action this morning from names like Apple. So I'm going to get into all the charts. We're going to look at the technical levels. I also want to show you why it makes sense that the S&P 500 may be ready for a 43% decline. It's pretty cool. I'm going to break out the charts right now. Let's get to it. All right. On that note, let's jump over here and let's flip over to our charts. This is the SPY, which is the S&P pre-market data. Again, S&P is tracked by an ETF called the SPY. That's what a majority of traders trade instead of having a futures account and trading the S&P futures. All right, what we see here is that the market on Friday basically closed up nicely. And then we saw this action here, right? So this was where we closed on Friday, sideways action Friday night. And then Tuesday morning, we started out early at 4 in the morning. That's when the futures, I shouldn't say the futures are open overnight, but it's when the pre-market is allowed to trade. We see that the big boys wanted to get this market up to start. My guess is so that they can dump into the open, into retail investors buying at a higher level. And we have come back in just a little bit here, and we're flatlining, but we're still net positive on the morning session. All right, there are some stocks moving, but let's go into what I promised you guys in terms of the S&P 500 and why it could drop 43% and why it makes sense. And this is the stuff, believe it or not, I'm sitting there over the weekend, hanging out with the kids, hanging out with the family, having a great time, but I can't help myself. I'm like drawn back to the charts because the charts just reveal certain things when you study them that really blow my mind. And this was one of them that I found over the weekend. So what do we want to do? This is your chart of the S&P 500 going back to your 2007 high, right? So right here's your 2007 high. Here's your 2009 low. Now notice the connector here. So here's your secondary high in 2021. And we know that just as of Friday, we went up right into that level around 533 on the spiders, or in this case, it was around 5,300 and change on the S&P, and we tagged this trend line for the third time. Are we going to break it? We're going to find out, but that's not the important thing that I want to show you here. Next, what we do is we take that 2009 low, we connect it through the COVID low. Now, what I want to show you guys on this is that if we look at the drop here during the Great Recession, and then we do a drop here, which was our next bear market from 2020, late 2021 through October of 2022, we want to find out what percentages these drops are, right? Okay, so bear with me. I'm going to do these calculations right now on the chart, and you guys can watch. So let's do it right now. Let's take our trend tool and go through here. Bear with me here, guys. So we have a 58% drop right here. Excuse me. And this is live TV, so if I got to sneeze, I got to sneeze. You guys just have to suck it up with me. All right. But in any case, as we draw this down, again, notice 58% decline here from the highs of 07 to the lows of 09. What's next? All right. Next, let's do this measurement right here. We take our high from 2021, so same tool, and we drag a line from 2021 high down to the lows here, and we get an approximate drop of 28%. Okay, so again, 58% and 28%. So you have two drops of those magnitudes. Now, one of the things we want to do is say, okay, well, we have 58, okay, plus 28, right? And again, what does that give us? That gives us, let me see, 64, 84, right? 84 equals 84 percentage points. Now, just do something interesting here, right? So what do we get? 86%. Apologize on that. Early morning for me. All right, so we have 86% drop. Now, what's half of 86%? What's the average? So again, we take this and we divide it by 2. Who knew you guys were going to do math today with me? But what do we get? We get 43%. All right, so the average, let's go over this, the average of this fall, the Great Recession, and this drop, which is the bear market of 2022, was 43%. Now, does anyone want to take a gander or guess at if we top out here on the S&P, how much of a percentage drop do you guys think takes us back to that line? Let's find out. All right, let's draw it right in and find out. So if we take this and we drop this down, look at this, guys. Basically, what we need to do here is we need to draw this out. So let's just say it comes out here and we hit it by, I don't know, let's say the end of the year, right? Or let's say early 2020, early 2026, we'll say. So if we fall, let's say over the next 12 to 18 months, the line here is upsloping and it's right at that 43% level. So basically your your average fall from those two bear markets is 43%. Remember, markets don't necessarily drop in straight lines, so you figure we would tag it somewhere over here. Again, 43%. That stuff is kind of cool, I have to say. So a little bit of mathematics today, but for the most part, these are the types of things that really blow my mind when looking at the charts, especially when analyzing it and saying, wow, if we were to dump out, and again, remember, the lines don't go straight. We're not going to crash, at least in my opinion. I don't think we're going to crash. But if you take 12 to 18 months to get back down 43%, which again, if we're talking a 43% drop, my guess is it takes 12 to 18 months. We would literally do a 43% drop, and it would tag the line that goes back to here from 07 to the .com, or excuse me, to the COVID low right there. All right, so I just wanted to show you guys that. I thought that was pretty darn cool. And again, in a weird way, when things align like that, it doesn't mean it's going to happen, no, but you have to take note. As a trader and a technician of the charts, you look at multiple things and you plan out, right? You game. It's game theory. You figure out, okay, well, if XYZ happens, what happens? If ABC happens, what happens? A good investor and trader looks at all situations, including what if the markets go up and just keep going up? Where could we go? And maybe I'll cover that in tomorrow's game plan, looking at your kind of most bullish case scenario if the markets continue to go to the upside. All right, so looking at a couple stocks here, we have Apple up on the screen now, guys. I want to show you this Apple chart. This is a line I highlighted to members that I do think is worth keeping an eye on. First and foremost, this was a level that I talked about being a bounce level on Apple. I even covered this in the game plan, and look at that. I mean, talk about a perfect bounce level on Apple. Now, the question is okay, we've had the bounce, big bounce. Where could we potentially be headed? Well, if we look at this, right, what do we get? We get basically this high here, connected through this high, gives us right here. And then we have this upsloping trend line here to here, right through here. And it's basically at 195. Now, again, that gives us a confluence, two trend lines that are connecting and going right through each other at a resistance level. Now, pre-market today, Apple was trading right here. Now, it has pulled back a little bit in the pre-market. It's back down, last I checked, around 193, but it did touch this 195 level pre-market, which is fascinating. Now, the news on Apple was that basically year over year, it was revealed that Apple iPhone sales in China are up something like 50% or something like that. So there's somewhat of a resurgence here in the Chinese economy that's helping Apple, and that's, again, pushing it back up. The other thing to note here is, do you guys see something else? And I love this, and I love kind of quizzing you guys in here. Do you guys see anything else of interest? Is that if we took away this trend line, it's not perfect, right? It's not perfect, but it certainly looks very close to having a parallel line. This line here is very close to parallel along here, right? So you almost have these two parallels that are going across here, which also are intriguing. Parallel analysis, using parallel channels, has become part of my playbook that I use on a daily basis. Speaking of parallels, I want to show you a parallel on First Solar that I think is worth keeping an eye on here. So if we look at First Solar had a huge week last week. I kind of made fun of it a little bit because I thought it was a little, not the stock or the company, but there was an analyst that's like, solar's the new AI play because of the energy needs. And I'm like, yeah, maybe, but most of the sales from a lot of these companies come from residential, and with interest rates higher, they're all suffering. I mean, you look at SunPower's near bankruptcy. You look at a lot of these other ones, they're way off their highs. But anything is attached to AI goes parabolic. We know that. I mean, that's just the way it is. Like, you could go into McDonald's and be like, oh, McDonald's is the new AI play because eventually they'll replace everyone with AI, and McDonald's will go up to 52-week highs just based on that logic, right? But looking at First Solar here, what do we have, guys? We have a beautiful parallel coming into play right here, right? And we connect that high right here through all these highs. Now, right now, last I checked, First Solar was up just around 280, so it's kind of back to this upper level, maybe even above it. But I'm just kind of curious, and it's a good thing for us to monitor, is how does price react to this? Let's watch and see. Does First Solar just blow right through? That would be the less probable outcome, but it is possible. Versus does it maybe open higher and then get rejected and see some profit taking here on the way down? And again, these are things that we'll have to monitor and see, but certainly the move last week, incredible. In 4 trading days, it went from basically underneath 200 to 280 bucks. Incredible move. All right. So that's where we are on that chart there, guys. I do want to just do quickly NVIDIA. NVIDIA, again, just continues to power up here. If we flip to our pre-market data, it is coming in a little bit off of the highs pre-market. But again, volume pretty light here on this hangover day from the markets, from the holiday session. But you can see, again, we have this move here. This was after hours on Friday. This was pre-market where it opened this morning at 4 in the morning. And then you can see it came down, then got a bounce, and is now flatlining right up here, just trading below 1100 as an even number. So again, incredible move off of earnings. Again, I don't know if the earnings were as much, because the earnings did beat, but the whisper numbers were basically saying they had to come in at these levels. I think it was more about the dividend increase and the stock split that occurs, I believe, next Thursday, June 6th. The stock will split. I'm going to go out on a limb, and I think once the stock splits, the excitement's over, almost like the ETF for Bitcoin being approved. We saw that sell-off following that, and my guess is you'll see that pullback once we get that split done, and it's kind of old news at that point. All right. On that note, I want to flip over to the Wheel of Appreciation. Let's do our drawing. I am not 100% sure what won last Friday. If anyone lets me know, I would appreciate it of the staff. But either way, it's, that was, listen, 4 days ago now. You guys know me up here. Everything is charts, and you look at enough charts, it goes one ear out the other, or you block out something and you start forgetting people's names and stuff like that. Just the nature of charting too much. All right, in any case, you guys know the Wheel of Appreciation always appreciates you guys, and it's my way of giving back on a daily basis to give away prizes equal to $300 all the way up to $2,000. And Jimmy Rig 54, thank you for having an easy name for me to pronounce. You win today, Jimmy Rig 54. So again, I'll reach out to Lawton at verifiedinvesting.com, and he'll get you all set up. Speaking of Wheel of Appreciation, let's jump over here, and we will go right to spinning our wheel here and go from there. Oh. All right, I was just told, guys, the live day trading room was what was on the docket from Friday's Wheel of Appreciation. So, Jimmy, congratulations, a free month. That's $400 right there. And here we got NordVPN, 1-year subscription. Fantastic. NordVPN, that's a free 1-year subscription to NordVPN. And again, whoever wins that tomorrow, same thing. You'll reach out to Lawton at Verified Investing. And don't forget, guys, for those of you that have companies out there, if you want to get in on the sponsorship and be on this Wheel of Appreciation and give back to our amazing members, each and every one of you guys that tunes in on a daily basis and supports us, don't forget, guys, reach out to Lawton at Verified Investing as well. And again, he'll get you all set up on the Wheel of Appreciation. All right. On that note, what we're going to do is we're going to thank one of our amazing sponsors, I Trust Capital. And again, if you want, to have crypto in your IRA, gold, whatever, they take care of it. They rock. They are rock stars. And honestly, I think crypto in a long-term portfolio like Bitcoin, it makes a lot of sense. I don't know if I would choose, Pepe, but again, I think with Bitcoin, it probably is as, listen, there's nothing safe, there's nothing guaranteed, but I myself would consider it. So we're going to take 30 seconds to watch this iTrust commercial.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust, and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back here, and I'm just kind of going over my channel on Bitcoin, and I did a lot of research to try to find out what makes the most sense on the Bitcoin channel, and this is what I've come up with, and I want to explain. So one of the things to always remember, folks, is that charting is partially a science, meaning that it's exact in certain ways, like a Fibonacci retrace. It is what it is, right? You do the high pivot to the low pivot, and you do a Fibonacci retrace. It's a science. It's an exact number. When you're drawing trend lines, it's a little more complicated than that, and that's some of the things that I go over in the Winning Trader series and kind of help you understand how to do it. And so what I was doing over the weekend was I was saying, okay, well, exactly where would these lines make the most sense? And what I came to is basically this parallel here, where you're taking your exact low. Let me bring up my drawing tool again. You take your exact low right here to right here, and then right up here. And then notice how we broke above, and then we've stopped right there, and we touched it right here, and it's staying above. And so to me, at least, in terms of the art of trend line drawing and channel line drawing, this is, to me, what makes the most sense. So that's where I'm going to take it at this point. And the reason why is, as long as we continue to stay above without a daily close below this line, Bitcoin, like I said last week, it remains bullish on the charts. So again, the charts are indifferent. They don't have a bias. They don't have a plan. They don't have a narrative they're trying to spin. It is what it is. And as of now, we had the downsloping channel. Remember what I've taught you guys. Downsloping channels, in general, they break to the upside. And remember, I'm saying in general because it's not 100%, but I would say about 7 out of 10 times downsloping channels break to the downside. Here is, or to the upside, excuse me. Here's this one, and it broke to the upside. So there's part of that higher probability. Remember, upsloping channels, like we've seen on the chart of the 10-year yield, which was like this, the 10-year yield was like this, they tend to break to the downside, and that's what happened on the 10-year yield. In fact, we can talk about that chart if I have enough time here. I'm not sure if we will. But my point on this remains that in general, as long as we stay right here and we don't start closing back within this channel, the probabilities remain that upside is the most likely probable outcome at these points, okay? Looking at Ethereum, Ethereum keeps trying to push up to that double top. We know we got this beautiful channel breakout, and what a breakout it was. I mean, sometimes it's very rare you see this type of meteoric breakout. It's a very impressive breakout. But interestingly enough, we still haven't even tested this high pivot up here at around 4,100. So I am looking to think, I do think that that is a possibility that we could hit. I actually think we could actually pierce it and go to as high as 4,200. But I will say this, 4,200 would make me start to think about pulling the trigger on a short if we hit it this week. All right, and again, remember, I'm a shorter-term trader, so it doesn't have anything to do with my long-term views on Ethereum. For all I know, it's 10,000 in a year, 2 years from now. I'm a short-term trader looking for moves here, and then a quick move here, and then I take my money and run, just to clarify so I don't get all the hate mail from the Ethereum lovers out there. Okay, looking at the chart of gold, gold has broken this trend line to the upside. Notice yesterday we did have an update on gold. Today we are up a little bit as well. But the question I have is, are we starting to make bearish consolidation on oil here? Excuse me, on gold. And what I mean by that is that once we broke here, are we now starting to do this and stay below this line for a dip? And that would be something that I don't know. The probabilities, this would be called an immature pattern, so it's not a fully mature pattern. The difference between immature and mature is that immature probabilities are 50-50. Mature, you start really shading towards one direction, like 70-30%. And this is not a mature pattern yet. Now, in a few days, if we stay underneath, it would become mature, and you'd start to favor the downside. One little side note, PCE data comes out on Friday, and I'm wondering, do we do this into Friday, and does it set up for a bearish move on gold or a bullish move? Do we break to the upside? And again, that PCE data, 8:30 a.m. on Friday morning, which again, today's already Tuesday. I always forget that because it throws me off when we have a holiday on a Monday. Silver having a good move here, guys. Notice the silver retrace kissed my $30 target level, where it was kind of a buying opportunity. It's now turned back up. And again, we'll see if it takes out 32.50. If it does take out 32.50, 35 and change is your next upside target resistance level. Eventually, I think that gets broken as well, and we could go as high as $50. But again, you'll get pullbacks along the way. All right, looking quickly at natural gas. I got to refresh this chart here. So these were all my levels last week on natural gas. Remember, we talked about how, you know, I was starting short positions, you know, short, add to short, add to short, and that's what we did. And what's cool is we find ourselves basically in the money on the short on natural gas by using the dollar cost average method at each of these levels. This was a 618, this was a gap fill, this was a double top. And again, you just slowly inch in, knowing how volatile natural gas can be. And now natural gas has pulled back. You did get a topping tail on the daily chart as well, which is a powerful sell signal. I actually think natural gas is going to come back maybe as low as 250 to 240. So I do think there is decent downside there. But nice little reversal to the downside, putting us in the money on nat gas. Oil real quick here, guys. Upsloping trend line. We noticed we broke to the downside. We're now doing what we call a classic retrace to the scene of the crime. There's going to be resistance right around 80 bucks. There is a chance it could get higher. I am not short gas at this point, but I am looking for a potential entry. One of the things I'm looking for is taking basically these lows here. If we did pop up into here, this is that former head and shoulder pattern neckline that I was talking to you guys about prior. It did break. A retrace to that scene of the crime would probably get me on the short side, considering my macro outlook for the U.S. economy, as I do believe we will continue to see slowing. All right, so that's where we stand. I did say I'd talk to you guys quickly about the 10-year real quick, so let me just cover that really quickly here, guys. Again, I don't have my lines. This is a different trading view account, but the essence of it is very simple, right? We had, in fact, I can just draw a parallel in. You guys can see behind me if you want and just watch as I do this. But essentially what we have is we have this parallel here, and then we drag that parallel down here, right? So there's your parallel. And what we could see on this is that we did that classic, and so here's that upsloping channel, right? So upsloping channel, it kept on hitting the highs, going back to the lows. Here was your breakdown, here was your retrace to the scene of the crime, and that's very common. You'll hear me use that term, scene of the crime, very often, and it's used as a big resistance level to really ultimately push price down again. And so you get the initial break, and then you come back in. That's the most probable outcome. It's not the guaranteed outcome, because we know in trading and investing, there is absolutely no guarantees. I take losses all the time. It's just the nature of the beast. All right. On that note, guys, I want to wish you all the best as always. Don't forget, guys, to make sure if you want to be entered into winning NordVPN, what I need you guys to do is share this stream on your social media. That's how you win. If you don't share, you don't win. It's just, even if it lands on you in the comments, you don't win. So share this around and then post in the comments where you shared it, and make sure you enter in to win all these prizes on the Wheel of Appreciation that these sponsors have donated, as well as us here at Verified Investing. On that note, guys, always a pleasure. I will see you guys tomorrow. Take care.